Many ag commodities are produced via contract with income subject to self-employment tax. However, there is a rental real estate exemption that can play an important role in minimizing dues. And joining us now is Roger McEowen with the Washburn University School of Law. Good morning, Counselor. Thank you very much for joining us. Let's start with some general background on the contract production of ag products.
Well, good morning, John. Good to be with you. Yes, there has been a dramatic increase in the contract production of ag products over the past 50 years. According to USDA, if you look at their data as of 2017, which is the nearest year to now that I could find, 34% of U.S. farm output is produced under contract, and that's up from 12% in 1969. And it's been fairly constant at that 35 to 40% range for the last 20 years. So I think it topped out roughly around 37, 38%. We're at 34, and it's kind of been bouncing around in that range for 20 years. But that's a dramatic increase from where we were a generation or two ago.
Roger, is the producer's contract income subject to self-employment tax?
Well, that's a great question, John, and in many aspects with respect to tax question, the answer is that it depends. Section 1402 is the pertinent code section here. That's the self-employment tax section of the code. A lot of farmers want to avoid having to pay self-employment tax in addition to the income tax. Well, self-employment income is defined as net earnings from self-employment that is derived from any business, trade or business that the individual conducts. So a real question is whether if I raise an ag product under contract for somebody else, am I engaged in a trade or business? If I am, it's subject to self-employment tax.
Can some of it be excluded from self-employment tax?
I think that's the key to this. That most of these contracts, the way you read them, it's going to be pretty easy for a court to conclude, and most of the tax court decisions on this reach this result that, yes, the producer is in a trade or business of producing an agricultural product, so the income is subject to self-employment tax. But there's an exception for building rents. If you rent real estate and personal property with the real estate, that's not subject to self-employment tax. So I think here's the key. In these production contracts, what I am getting paid for not only are my services, which would be subject to self-employment tax, because that's myself being engaged in producing an ag product. That's a trade or business. But I'm also getting compensated, at least I would argue some of that payment is for the lease of my building in which those livestock or those birds are going to be produced. So if I'm producing animals, if I'm producing poultry, there's a building that I put up probably to get the contract. And part of that payment I get each year represents building rent. It's that portion that's not subject to self-employment tax. So if you can get that carved out, you can save some self-employment tax.
That's a very good point. Roger McEowen with the Washburn University School of Law joining us here. Thank you very much, Counselor. Have a good afternoon.